how I see Brexit is ultimately a protest vote against the fact that the capitalism that we've had over the last 30 years has led to a lot of growth, but the returns of that growth have accrued to too few people, that it could act as a catalyst for other exits, because you're funding these current account deficits via portfolio inflows that come because they're running away from the 10 trillion of fixed income assets in DM economies that are attached to negative interest rates. So it comes to us, and then it leaves us whenever the Fed huffs. I'm struggling to see the significant direct impact that Brexit or even significantly slower UK growth has on the income side of our national income statement.
Are we now sitting in an abyss of another financial crisis globally? If you bring it home, while the trade links with the UK is minuscule, we're talking about 4% direct trade with the UK, the financial linkages, however, are quite large. We're talking more than 40% of liabilities in SA that are related to the UK. Although there's an offset with assets that are similar, but it's a lesser number. The net effect, we're talking about an exposure of around 10 to 15%. Will negatively impact the growth outcome for SA. We need a strong Europe, we need a strong US, we also need a strong China, but with the euro area actually likely to shave off about a percentage point of growth, that's problematic for SA. It does have impact in terms of confidence. I think confidence is an important thing to be looked at in SA. There's confidence crisis in business, there's confidence crisis from the consumer.
People commenting to say that the Brits didn't actually know what they were voting for because the second most Googled item immediately after the referendum was announced was, what is the EU? The UK gets about 500,000 net immigrants coming into their economy every year. And that is what the majority of the Brits have seen, that differentiation between the haves and the have-nots. There's going to be a power play at this point in time to say, watch out. If you leave, this is going to be the fate that you suffer. And I suspect that in the long run, that could potentially hurt the Eurozone the most, and the flow on or knock-on effects to South Africa. This uncertainty is probably going to be the factor that will create the most costs in the long run for us as a country and for the rest of the world.
I see Britain and the EU's challenge as being South Africa's challenge and indeed Africa's challenge. The British must now negotiate to replace 50 trade agreements. That's a massive task. There are 12,295 trade regulations that will now need to be reconsidered. 1973, when Britain joined the European Economic Community, they abandoned their trade negotiation team and structures. They've established a dedicated Ministry of Brexit in Whitehall. And this is the first time that such a ministry has been established since World War II. So I think that there's a basic consensus that we're dealing with one heck of a crisis, which we don't really understand, and what should we do? My suggestion would be that we put together an African negotiation project. How will the Brexit decision influence our previous stable trade and negotiation counterparts? Do we need to go and send teams out to the United Kingdom and to the European Union to actually go along and negotiate? If we're not there when the rules are made, it's either plan or be planned for. The United Kingdom is second to the United States of America in the production of intellectual property, creation of knowledge, patents, copyrights, and they do phenomenal research in conjunction with European universities. Already those taps are being turned off.
The importance of diversifying economies and letting that growth, getting that growth to the big masses is again amplified by this. And I mean, the UK by no means is one of the most unequal societies there is. I think there's a lot more unequal societies out there. So I hope this is a lesson for us.
South Africa is a very counterintuitive place. The business community has for long regarded anything that happens outside the factory gates as not being that relevant. Well, what's happening outside the factory gates is now flowing in. And so we need to go and address this very, very seriously. And what is flowing in is poverty and deprivation.
Brexit represents a protest against rising income inequality. We oversell the upside of globalization because we undersell the fact that those that have benefited have not compensated, the losers. And now the losers are coming back.
Globalization is strong and alive at this point in time. The search for yield, investors are grabbing anything they can find to generate returns. How can it be that when debt is so high and there's risks in the world and the S&P 500 is at record high, you don't erode an infrastructure of a country overnight? The deep financial markets that we find there, the liquid gilts bond markets that are operating in there, even if they operate on their own outside the EU, because it's really just a trade deal that happens from that perspective, whether they're in or out, they remain the financial powerhouse of the world, which reserve managers globally will find interesting and will continue to allocate some reserves to the pound in the same way as the South African Reserve Bank will do.
Ask whether we're on the right side of the fourth industrial revolution. I believe that the business community, you ladies and gentlemen, are crucial in providing guidance into what the curricula for schools and universities should be, so that we can actually educate for employment. We have been able to avoid those conversations because the situation hasn't been serious enough. Now it's getting very serious, and it requires new and different types of leadership and capabilities.
So South African business is sitting with around 700 billion that they need to make decisions about and that they're keeping at this point in time in their back pocket because they're too scared to expand. Since 2008, we've said we need to reindustrialize. We need to start making stuff again. We are 70% dependent on consumer spending to keep this economy going. And for as long as we stay in that track, we probably won't see definite growth.
I see a chauvinism within the United Kingdom. I see a growing chauvinism and nationalism within Europe. We've had to deal with lots of chauvinism here. I see people going along and being extremely protective and rolling themselves into a cocoon, which is always very, very dangerous indeed. It's human beings that are suffering. And the human beings that are suffering because fundamental human needs are not being satisfied. The Middle Eastern Muslim regimes are extremely elitist in their benefits, and they keep the majority impoverished. They energy wars and military-industrial complex wars that are going on there, and it's a very, very complex configuration.
If you see a response as what I'm beginning to see out of the UK, George Osborne talking about reducing corporate tax from about 20 to below 15, it's a proposal. Now that's a very aggressive move. And I think it goes to the heart of what's happening there in terms of business confidence that has been shattered. If they do that, we can turn this around quite quickly.
It's been called the UK Independence Day. We're going to make our own decisions. We're going to do our own thing. We're going to decide for ourselves what we want to do. We're not going to, feel all this being imposed on us. And there might be a bit of a misalignment between what has been sold to the broad UK public and what the actual outcome would be. You could very well get kind of trade agreements and so on, that it's a free trade zone, but looking then at curbing immigration. However, I'm not necessarily sure that will satisfy the people that are not satisfied.
The Luddites were the grouping that opposed the Industrial Revolution, and I believe that COSATU is a neo-Luddite movement. The arguments that are put forward are from the old smokestack industrial revolution. And we need to actually look at where we are at the moment, the world of work in which we are operating in, and it's a very dangerous world of work, and particularly when we conjure up historical past arguments to deal with the here and now.
Emerging market countries now have stronger fundamentals, In fact, they've got a fiscal policy, a monetary policy that is sounder on average. We had a maximum pessimism in the political arena. What we have found is that foreigners continuously buying SA bonds. SA is being salvaged by these deep liquid markets, and investors have the ability, one, to understand that credit rating downgrades to junk is not the end of the world, and two, economics normally is dislodged from the outcome in markets, especially if 60% of your earnings are derived from overseas, which is what we found on the JSE.
We're not going to get any earnings because global growth was already fragile. Brexit means that it's going to become even more fragile. Right? But global growth has actually been range bound around 2.5% for almost half a decade. And when that fragile global growth then is perceived to have increasing downside risk, we actually see asset prices rising. Why? Because the financial markets immediately price in further action from the only game in town, which is monetary policy. The cheapest risky assets and the highest yielding risky assets are in EMs, which is where the most capital flight over the last 18 months has been from. Halfway through the month was the second biggest month in the last 4 years. So actually, we've had a net benefit from Brexit, from the financial market.
In spite of the fact that there's 4 million people saying they should go for a vote again, some people saying that democracy is definitely not being held up in the UK. I think they can't afford not to act on this. They're going to look really, really bad in the eyes of the world and the EU and everybody else, their own citizens, etc. So they will have to act on that.